was a volatile session for the D Street today, as stock specific action took precedence over environment where there's a lack of global cues. Now at close, Sensex was down about 25 points. It ended on a flat note at 66,360 levels. The 30-share index touched an intraday high of 66,559 and an intraday low of 66,177. Now, Nifty on the other hand ended 0.04% higher at 19,680 levels. It touched an intraday high of 19,729 and an intraday low of 19,615 levels. The broader markets continued to remain mixed in today's session. Nifty Mid Cap 100 was up about 0.39% and the Nifty Small Cap 100 closed with losses of 0.11%.
Okay, what are the sectors and stocks that were in focus that you're tracking?
So, Shweta, the metal index was a top gainer today among sectoral indices on the NSE. It was up about 2%, followed by Nifty Auto, which was up about 0.95%. On the other hand, PSU banks, FMCG and realty counters were down from 0.5 to 1%.
Okay, let's move on to earnings. Asian Paint came up with their quarterly results. The results beat estimate, but at the same time, stock has taken a beating.
Yes, it's a curious case because Asian Paints had a very big profit beat as far as results are concerned. It reported a 52% jump in first quarter profit, held by a robust demand for its decorative paints and cooling raw material prices. Now, the company's cost of raw materials consumed fell by about 12%, which was largely due to a softening of crude oil prices, which accounts for about 30% of the raw materials for the paint manufacturers. Now, this combined with about a 7% jump in revenue on the back of a strong demand in the decorative paints helped Asian Paints profit margin grow from about 23.1% to 18.1% from a year ago. Now, Asian Paints decorative segment, which accounts for about 80% of the company's revenue growth, logged a double-digit growth. Although the India business seems on an up and up, it seems that the street did not like the performance of its international segment as it was subdued, Shweta.
All right, let's quickly get in Kranti into this conversation. Kranti, good afternoon. How are you reading the Asian Paint results? The results are looking good, a double-digit growth that we're looking in profit jumping 52%. What then explains how the stock performed?
Yeah, the results are extremely good, Shweta, and it's a overall the results and the profitability, the margins are improving. But you might be thinking why the stock has taken a beating. The stock has it's a fairly large cap stock with extremely high valuations. The valuations of stocks like Asian Paints, the valuations always look stretched for companies like Asian Paints with a market capitalization at 3,26,000 crores. So. And in fact, today during the trading day, the stock touched the high point also it touched during the day. Market right now it's entering into a sort of a consolidation phase, so we can see some kind of profit booking that took place in the market, and the stock has been sharply rallied in the past 6 months. So some kind of profit booking we witnessed with Asian Paints. But what is the strategy for an investor to do when a stock like Asian Paints comes down? It gives a good opportunities, whatever be the reason the stock came down. It gives a good entry point for the investors who are waiting to have these kind of blue chips in their portfolio.
I'm looking at sales for Asian Paints in international business, which declined by almost 1.4% to 695 crores from 705 crores on the back of economic uncertainty, forex crisis, liquidity issues. Is that going to weigh in on Asian Paints' fortunes and the stock performance?
Shweta, two things we need to consider. One thing is with respect to their international business and the segments they have. The contribution to the top line is minuscule with respect to their international business segment, and also the bathing and other segment business, the contribution is minuscule. But right now going ahead, market have apprehension the upcoming competition with respect to Asian Paints that they are going to face from the new entrants in these industries. So coming in the coming quarters, we can see they might have some kind of competition from the new entrants from Birlas, and also from JSW. These are the groups that are trying to uh, test their business momentum with respect to paint industry is concerned in the coming quarters. So this is one overhang is there back of the investors' mind, but they have a strong prominence with respect to the networking and dealer network across the globe, and it's the market leader. Coming to the point, the main reason for the stock to take some kind of profit booking it witnessed today, we can pursue the same manner.
All right, let's also quickly, in fact, take a look at Bajaj Auto numbers, Suyash. Bajaj Auto also released its numbers in line with estimates.
Yes, Bajaj Auto's profit and revenue figures for the quarter ended June both were in line with the estimates. Bajaj Auto reported a 42% year-on-year jump in net profits. Revenue from operations jumped about 29% in the quarter under review. Now the rise in net profits, Shweta, is on the back of a favorable product mix, healthy volumes, and an increased in the average selling price of its lineups. Now the revenue during the quarter, as the company said, was underpinned by a double-digit volume growth with sustained buoyancy on the domestic front, cushioning the weak, albeit improving export performance. Now the company reported its highest quarterly EBITDA of 1954 crore, showing a growth of about 51% year-on-year, while margins were at 19%. A 280 basis points jump. Now, the stock of Bajaj Auto closed 0.67% lower, and year to date, it is up about 36%.
Okay. Kranti, are these numbers in line with estimates?
Yeah, the numbers seems to be in line with the estimate, Shweta, but going ahead, how the EV space, the two-wheeler space is going to dominate with respect to EV space. That is the space they're going to focus, how the brand they're going to build with respect to EVs concerned. What's happening is right now the nature of the entire two-wheeler business is changing right now. There are new age companies, new companies are entering into two-wheeler space. Even most of the brands are unknown, but they're very price competitive. So the new rural market is getting dominated by these new players in the market. So how Bajaj going to play the competition and competitive pricing with respect to EV is going to play a major role for Bajaj Auto going ahead. Right now, the numbers looks impressive. And going ahead, what Street is going to track is one is their export numbers and also the domestic EV numbers. These are the two segments the market is going to keenly observing from Bajaj Auto.
Okay, the motorcycle growth is up, double-digit, consistent. Chetak EV is also picking up. I think it's interesting to watch out for how Bajaj makes a big foray into EV market with its existing set of portfolio and the new the new products it may include in its portfolio in the year to come.
Also, it's able to maintain such healthy margins, Shweta, and that we have seen the confidence at least of the D Street, 36% year-to-date returns. I mean, at this point, it seems like Bajaj Auto is fairly well placed. So, Kranti, does the stock demand a re-rating at this point?
Yes, it's very early to say a re-ratation with respect to the stock. How the sustainability of the numbers, that is extremely crucial, and also how the EV space they are going to place in the coming days, that is extremely crucial for the stock. So we need to wait for another couple of quarters to get a re-rating on the stock at this point of time.
Tata Motors is another one of the companies that is going to declare its earnings results very soon today. So what are your expectations from Tata Motors?
Yeah, Tata Motors, we are expecting a PAT around 3,090 crores. Okay, that's a decent number. And Tata Motors, we are going to see a complete turnaround with respect to the overall performance of the company. JLR going to post some kind of good set of numbers, but we need to see the slowdown and things, the external factors at China is going to play a role on Tata Motors. But we are quite optimistic with respect to the domestic business is concerned. The passenger vehicle segment is going to post a robust set of numbers. And what we can see is how the commercial vehicle space, the CV space. This is extremely crucial for Tata Motors going ahead. But right now, it's all about the passenger vehicle segment that's making difference for Tata Motors. And the one of the street worry was the high debt on their balance sheet. But company is managing very well. The new management is taking in a nice way. They have been, in fact, repaying the debt and trying to reduce the debt on a consistent basis right now. So Tata Motors is the stock to watch out going ahead for the investors.
All right, we will of course bring you results as and when they come in for Tata Motors, which is expected to release its Q1 results today, later in this part of the day. But Jubilant FoodWorks is another company that we are tracking, and the quick service restaurant operated by Jubilant, Domino's to be particular, is not doing too well.
It's not doing well, Shweta. It missed
People not eating enough pizzas. I'm.
It seems like that.
Seems like that. Absolutely.
So Jubilant FoodWorks, Shweta, reported a 74% year-on-year decline in consolidated net profit. Now the profit figure came in at about 29 crore. The street had expected a figure of about 75 crore. Now the company's revenue from operations rose about 6% during the quarter under review. Now the operating profit. The food services company's operating profit decreased by 9% year-on-year to 275.8 crore, while operating margins narrowed to 20.7% from 24.2%. So while revenue is going up, but we have seen a certain contraction in the margins, at least in the case of Jubilant FoodWorks.
And the demand continues to be weak. How are you reading this, Kranti? I think we can joke about it, whether people are eating pizzas or not, or is it the fact that they're still perhaps afraid, scared to go out, step out, eat at a quick service restaurant? What exactly is hurting Jubilant's prospects?
Shweta, on a lighter note, you can put in such a way, people are becoming more health conscious and want to slim.
All right. I would love to listen to that. I mean, I don't mind hearing that.
Yeah, the QSR space is playing very good in terms of the recent results are concerned. Probably we can have a show with respect to the QSR stocks are concerned, the space is concerned separately. But while coming to Jubilant FoodWorks, the stock has been posting a disappointing set of numbers from past 2 quarters. The main reason is there is a change of the segment, and we can see clearly change of food habits with respect to the urban population is concerned. But there are the other QSRs like Westlife, the MACD, they have been doing very good. So the Jubilant have been posting some kind of negative set of numbers at this point of time. So we need to see how the next couple of quarters earnings are going to be for Jubilant FoodWorks.
All right, and what are the big other earnings that you're tracking this afternoon?
Yeah, the Tata Motors is the main company we're tracking, and L&T also the company. The results going to be interesting, and also the infrastructure business. They have done the economy is going in a right way. The capex has been improved, and the subsidiaries of L&T, how they are going to contribute to the top line. These are the crucial things.
Yes.
Yeah. So this is the company we are tracking at this point of time.
All right. So some of those numbers are out. We continue to track them. Others are still awaited. Kranti, we'll get you back as and when they come out. But thanks very much for joining us this afternoon with your updates.
Thank you, Shweta.
Shifting focus for now, as the last date to file income tax return nears, nearly 7.4 crore entities, including individuals, have filed income tax returns so far this financial year, which is financial year 23, an increase of 6.18% from last year. Now, India's gross direct tax collection grew 20.33% to over 19.68 lakh crore in financial year 22-23. Interestingly, of the total ITRs that have been filed, about 5.16 crore declared zero tax liability. Now, the centre too has sent 1 lakh notices for non-filing of returns for those who have underreported or misinterpreted their income in ITRs. Notices, in fact, were sent where income is more than what was filed, or there is an anomaly in the income that has been filed or stated as opposed to what the income tax believe you earn as an individual. So 1 lakh notices sent so far. All of that, of course, coming on the back of the fact that the last date to file income tax is nearing. It's 31st of July. Joining me in the studio are my colleagues Amit Kumar Ranjan. Also with us is the editor of English Newsverse, Rakesh, Khar, sir. Thanks very much, both of you,
Shweta,
for joining us this afternoon. I want to begin by asking you, Amit, quickly run us through what these numbers are as they've been reported as of yesterday. I'm sure there's been some sort of change in these numbers since yesterday.
Yeah, that'll happen till the last date. I'll just give you a backgrounder to what is the notices that have been sent. Now, tax revenue has been constantly rising for three to 4 years, despite tax rate not being increased. Record 7.2 million income tax returns have been received in one day. So that record has been broken. Average processing time has been reduced to 16 days. All of corporate tax collection has grown 16.91%.
Okay.
Up from 10.4 lakh crores this year, up from 8.59 that was last year. Now, having said all this, indirect taxes account for 11% of the GDP in India. Direct taxes account for 6%. Most developing countries, it's the other way around. 11% is the direct taxes. Why is that? Because of the parallel economy.
Okay.
It is that parallel economy that this 100,000 reassessment notices probably aim to basically curtail. So, reassessment has been done for cases where the income of over 50 lakhs has been evaded. According to the Finance Act 2021, the reopening of old cases was reduced to 3 years from 6 years. But reassessment notices can be issued within 10 years. So that there is a grey area over there. This 100,000 notices are apart from the 55,000 cases that were reopened following the Supreme Court order, and those were concluded by May 2023. So in effect, you can say it is 1,55,000 cases that will be concluded with after these cases have been taken care of.
Okay.
So despite all the increases in tax net and everything, this is the economy that these notices probably aim to curtail.
Okay. I have a two-part question for you, Rakesh. I want to first begin by asking, I mean, of course, this is good news. The number of people filing ITRs is increasing, but from what we're looking at, most of them, majority of them, in fact, 80% of them are saying, we don't have anything to file, we don't earn enough to pay taxes. I'm not sure how true that is. Government will, of course, find out, but overall good news in terms of the numbers that we are getting so far. And there's still one more week to go, which means that the numbers will increase.
Thank you, Shweta. It feels good to be back here with you on this particular show. I think, there are many ways of looking at the tax, month, if we can call this entire month of, July, where everybody is focusing and rushing around trying to file in the returns. We must celebrate, what we call the middle class, really being the fuel engine for the Indian economy in terms of the tax revenues that finally come up. So when I say celebrate, I mean to say that, the Indian economy is being driven consistently by the Indian middle class, especially the working professionals who are, so to say, diligently paying their taxes. There can be a matter of debate, which is academic, on how to expand the catchment area, where I guess the government of India and over the years has not been able to really meet up to the targets that they've set for themselves, because the tax base has to be expanded, much more to really harness the investing or the earning capital of this country. But the big point is that the Indian middle class needs to be celebrated, especially the working professionals who are right at it year after year, filing their returns. We don't need to get unduly disturbed by, the tax department going after the defaulters and evaders. I would imagine that that's the right thing to do, Shweta, because in a country of 1.4 billion people, it is important to have the fear of the law authorities, and if there are violators, they need to be booked. But that's a very small section when it comes to working professionals.
Right.
You can't run away from the tax dragon because you are filing tax at the source. It is part of your salary. So in that sense, those who are the violators according to the finance ministry, they have violated it on many more counts than their salaries. It's important to showcase the contribution both of the income tax department. Over the years, they brought about a lot of transparency. They brought about enforcement. They brought about, in terms of the refunds, repayments. It used to be a huge challenge, and they're moving.
Quicker.
It's
It's
quicker.
faceless. It's faster.
faceless. Not, I think, 100%, but they're trying to make it
Absolutely.
faceless. In that sense, 2 quick points summarizing. Celebrate the Indian working professionals who are contributing to this large chunk of the Indian revenue, which is in turn fueling the growth story of India. So if we really decode this particular chunk's contribution, which it may not be being done on a regular basis, they're at one level fueling the welfare economics template of each government at the center and at the states, respective states, and at the other level, they are fueling the India infrastructure growth story.
Absolutely.
Well, this is the money which is going to build your highways and roads and infrastructure. Yes, we need to widen the tax base, and there I would submit that there's need to also expand the catchment area and bring in rich farmers as a taxpayer.
And increase corporate taxes.
And increase corporate taxes. Though, as a student of journalism and as a taxpayer, I would say reduce taxation for the individuals, but we do know there is merit and virtue in reducing corporate tax as well, though that might not have yet resulted in the desired intention of kicking up and reigniting the India growth story.
Okay.
From the capex perspective.
All right. Yes, Amit seems to have a contrarian
I'll just be
viewpoint
quoting-
that he...
No, not contrary. I'll just be adding to Mr. Khar. I'll just be quoting 2 little statements from the finance minister, that people gaming the system is not happening anymore. And 2, no longer is this, referring to these notices, a phishing expedition, phishing as an attack to steal your money. So she has underlined this by saying that it is no longer a phishing expedition. So it is basically within the law, and they are just basically trying to curb certain malpractices. That is all.
I don't have a map of the numbers, this 1 lakh notices, but if it's on working professionals, then I think it's a fishing expedition.
Okay.
If it is, when you really talk about being fair and transparent, which the intention is, then we really need to go beyond the working professional class. And we need to look at the big fish across in corporates who are registered themselves as different entities to avoid, and they have the best lawyers and chartered accountants on count to, so to say, not pay exactly the tax they're supposed to pay. And I'm all for farmers' contribution. They are the biggest contributors in terms of the employability, not as much as part of the GDP. But, when it comes to rich farmers, we do know that we have a capability to pamper them. When it comes to the middle class, unfortunately, it's not a political constituency as it is deemed to be. It should be. I do hope, and we do hope collectively, that as the Prime Minister goes to make for his 10th, Independence Day speech, there is a voice of resonance when it comes to celebrating the role of the middle class.
Absolutely.
Because it's really putting up a huge show of solidarity for both the ends, the bottom of the pyramid at one level, and also in terms of fueling the growth story.
Absolutely, in terms of fueling the growth story, and the government, they're saying you've got nothing to fear. If you are an honest tax-paying citizen, we're not coming after you. These 100,000 notices or 1 lakh notices, 1,55,000 to be particular, have been sent off to people whose incomes perhaps far exceed than what they have declared on paper. This is not everybody. This is not general people who are honestly declaring their income.
The evasion is north of 50 lakhs.
So evasion is north of 50 lakhs, which is you earn 50 lakhs and more and you say you're not earning enough to even pay taxes. That could be a problem. We will of course keep tracking. The last date, remember, is 31st of July for filing your income tax returns. We will bring you facets of how to do it, when to do it, how easy to do it, all of that in the course of next 1 week. But moving on to a similar story that we're tracking and coming in from Finance Ministry. If you fear that a loan recovery agent is going to turn up at your doorstep, you're not alone. Loan recovery has become a rather infamous exercise for harassment and merciless behavior. Several complaints and plea later, the government has taken a note of the pain of common man. Union Finance Minister Nirmala Sitharaman has said that the government has instructed both public and private sector banks not to take harsh steps when in the process of loan repayment and have asked banks to handle cases with humanity and sensitivity. Remember, the Reserve Bank of India in a 2008 circular warned banks that it might consider imposing a ban for engaging with recovery agent if it receives complaints about those agents. But despite all effort, the harassment of loan recovery agents continue unabated, to the point where Madras High Court last month asked banks to refrain from using coercive action or muscle power when in process of recovering money. We could quickly have a reaction coming in from the Finance Minister. Let's play that up.
Given an answer, I would want to add something to it. The Honourable Member has raised a very sensitive issue. I know I've heard complaints about how very mercilessly the paying back has been followed up by some banks, whether they are public sector banks or private sector banks. The government has made sure through the RBI also to instruct such banks that such harsh steps should not be taken, and that they should approach this whole matter with a humanity in mind and sensitivity in mind. That instruction has been given to all the banks, be it private or public.
All right, that's Finance Minister Nirmala Sitharaman, of course, saying that you've got to be more human when dealing with loan recovery. Loan recovery remains a problem, not so much with public sector banks or private sector banks, largely with NBFCs. And when you take loans through these apps, there has been an attempt made by the government to tell people either not to go for these loan recovery or loan apps, and also crack down on some of these loan apps. Nonetheless, the harassment continues, Rakesh. I mean, we've seen visuals, we've seen pictures, people have committed suicide. It is a grave problem.
Indeed, it's a great problem, Shweta, but it operates at two levels to my mind. First and foremost, is it a directive or is there a abiding instruction that the banks have to follow? How do you define, sensitivity and humanity? Who will define that?
Absolutely.
Is it the bank manager whose KRA is to get his, loan converted into NPA? Converted it from an NPA into a performing asset. So, I guess, we need far more stringent, direction from the Finance Ministry, and more so from the Reserve Bank of India, on bringing about certain discipline in this particular activity. See, when you look at it from a bank's perspective, Shweta, we can't divorce that perspective as well. If someone has taken a loan and he or she is not paying up, then there is a challenge in terms of, how does that recovery happen? Now, the methods employed by some of the banks, especially the areas that you mentioned, the digital lending, infrastructure, and some private banks as well, and some very notable banks have also been seen erring on the wrong side of this. But it's equally incumbent upon people who take loans to follow a certain discipline in, paying up on time, so that this challenge doesn't arise in the first place.
Right.
Yes, it's a criminal offense to intimidate and bring in muscle men, and gunization of loan recovery is indeed a huge challenge. I hope the Finance Ministry's advice is not merely an advice. There is some strict monitoring and enforcement to see that these cases don't happen again.
You said something very interesting. I think my mind is still stick to it. You said, how do you really define humanity? How do you define sensitivity?
And who defines it?
And who defines it?
Absolutely.
I mean, what could be sensitive to you may not be sensitive to me. So
no, link it to the KRA of the bank manager.
Absolutely. And how they've grown up, to what level of sensitivities do they respond? Maybe harassing someone, calling them consistently is okay for one person, may not be okay for the other person.
No, and it goes back to the bottom of the challenge. So when you hand out loans, there is a huge urgency by all the banking system to try and bring in people without doing the due diligence. So if that due diligence is done in the right place, right at the beginning, you will notice, Shweta, that the capability of the person who's taking the loans to repay is somehow guaranteed. If you pick up a guy and pay a loan which at a level which he or she cannot pay back, and there is a challenge, but you still go ahead and pay the loan, and then all this machination comes into play. So it calls for not just sensitization across the board, it also calls for reworking the business model of all banks in place. The moment you hand out a loan, you have to be 100% sure in terms of your capability to judge that person's, tomorrow anything can happen. COVID happened, the best of the guys couldn't pay up. That was, uncertain times, unprecedented times. But outside of such unprecedented challenges, it is an imperative that the banking system or the entire BFSI sector, whether it's paying for an insurance premium or whether it is taking a loan for a car, being unable to repay back, or a house, the capability and the propensity of the Indian middle class to go for a loan is on the increase. I don't have the data. We have moved decadally from being a savings economy to a debt-led economy. So if at the core of it you're fueling your aspirations by taking loans, which is legitimate, but then you also need to at the individual level be sure that you are in a position to pay back and you have a certain discipline. For instance, credit cards, we've discussed it in the past. The moment you miss the payment cycle of initial payment or minimum payment, there is an additional charge that comes into play. That is the business model of the credit card. I mean, if they don't have those guys, so at one level they encourage people who can't follow that basic discipline. When there is a large chunk of such people who can't follow the basic discipline, when they make that mistake, they end up making another mistake of missing on the cycle also. So that leads to, it's a vicious cycle.
It's a vicious cycle.
And then finally, the bank wants to insulate itself. We have not done it. So they hire I have no shame in saying goons. And the goons' KRA is to get the money back.
One way or the other.
One way or the other. So that's pretty sad.
Absolutely. And come to think of it, and thinking of it from a bank's point of view, a financial lending point of view, we were having this discussion in the newsroom in the afternoon. It becomes a difficult conundrum for a bank if the government were to say, or the finance ministry were to say, be very cautious of who you are lending to. Then common man who may not have a lot of collateral to put in may not get the necessary loan they need, because obviously their payback capabilities are way lower. So on one hand you have people who are not getting the loan, and on the other hand you have people who have already availed the loan, not able to pay back, and banks go after them. The idea is, of course, to have a clean balance sheet for banks, because that is what we take a lot of pride in, because it's a very difficult conundrum to come out of.
Absolutely. As I said, at one level we have a large growing upwardly mobile, consumption class, which wants the best things for themselves overnight. They don't have the patience to wait till their, own wallet gets to the size that it can pick up things on their own. At the other level, the banks have flushed with funds, so they want to hold out cash, and we have a situation where the payment cycles are not met, then there is a mismatch, and then this entire vicious cycle comes into play. So I repeat that the entire ecosystem has to transform to be able to bring in that discipline. I don't think collaterals are asked for everything. I mean, the first and the foremost is your current salary, 3 months pay slips, 6 months pay slips. This is the foundation, and then the CIBIL score. So I really don't know, maybe it's time to revisit the CIBIL score itself, because CIBIL score was said to be the litmus test. Does it continue to be the litmus test? I really don't know.
Interesting.
So when CIBIL doesn't come through as the real litmus test, then what is the other test that you perform? For no occasion, not even for a second, am I legitimizing the employment of goons.
Right.
But then do believe that the bank has if the bank finally sends its report to the RBI, it will identify that particular loan having not been serviced as an NPA. So no bank is happy with that situation.
Right.
So P&L of the banks, capability of the individual to pick up a loan which he can afford to pay back, and then ultimately the kick in of the unfair practices in terms of goons and so a whole lot of agencies need to work together.
Absolutely. And banking institutions, of course, were walking a very fine line.
Absolutely.
Where to give out, where to dole out, where not to dole out, and once doled out, how to recover that money without harassing people.
So I do hope that the finance ministry's nudge is beyond the sentiment. One has to look at the real, so to say, the document. Beyond the parliamentary question that she said. I understand the ministry is quite seized of the matter. And what is their direction to RBI? I mean, is there a pivot to RBI? What is RBI's point of view? Why do these, what is the mechanism? Suppose you have a X percentage of loan default, what all does kick in? So, do collaterals kick in, or there's something else? So where does this goonism come into play, and how do we avoid that?
All right. How do we avoid goonism? Of course, nobody is in favor of that. The government has also taken note of the complaints that have been raised by various people who have perhaps been either harassed or not, but there is a stern message out there for banks, both private and public. You cannot harass customers if they're not able to pay back. I appreciate you both taking time out and joining me this afternoon. Good to have you in the newsroom once again.
I hope to be back soon.
Absolutely. We're going to move on for now.
Thank you.
Khar market, Delhi's upmarket, known for its posh crowd and luxury retail, continues to be one of the most expensive retail real estate. it's not just costly food, but costly rentals too. Rental space at Delhi's Khan market seems to have breached the pre-pandemic levels and have hit a record high of 1,500 rupees per square feet per month, which means that one has to pay an upward of 15 lakh rupees for an average shop floor size of 1,000 square feet. Now, this is almost double the costliest retail location of Mumbai and about 4 times that of Bengaluru. What exactly is driving prices in Delhi, in particularly Khan market? And do you have to be a part of the gang in order to pay up for buying a retail space in this area, in Khan market in particular? All that and more. Joining us is Altaf Ahmed, Chief Business Officer of Square Yards. Also with us is Vivek Rathi, National Director Research, Knight Frank India. Vivek, I want to understand firstly, is this particular to Khan market, or is this a case with entire Delhi? Is it more costly to buy a commercial, or rent rather, a commercial space in Delhi, or is it just with Khan market particularly?
Typically, if you look at the retail space post the pandemic experience and how significantly it has ramped up in terms of consumption, and therefore similarly whether it is retail values, retail rental values there have also picked up. The variables that you spoke about in terms of expensive markets, Khan market has always been one of the costliest in the country. Closely then followed by high street markets like the ones in Mumbai, Linking Road, Bandra region, and others. So on one hand, the Khan market has always been the costliest amongst all the 30-35 high streets which are prominent across the top 8-9 cities. Just that with the COVID period when activity was restricted very significantly in the mall space, the high street space was quicker to come back, and therefore what you see is rental levels emerging faster in the high street category.
Okay. Altaf, interesting point of view there, and it's particularly in case right now, looks like it's only in case of Khan market that rentals are higher, but they're higher than the pre-COVID levels, which to my mind is surprising. Is it because people are now vying for these properties more? Are people going out more than ever, or is there more to it than we can read?
There are people who are going more than ever. So if you see the entire luxury segment, whether it is real estate, whether it is consumer goods, the entire luxury segment in India in last 2-3 years have picked up big time. And Khar market is a typical symbol of luxury spending in India. One of the reasons it's not related predominantly to COVID. It's just that the evolution of Indian market is such where the luxury spending of people are increasing. Hence, places like Khan market, or even if you go to a tier 2 city, or rather smaller metros like Pune, like Hyderabad also, you will see these upstream markets picking up big time, and hence the rentals of those places picking up big time.
Mm-hmm. All right, and with respect to commercial property and commercial rentals all across the country, I want to understand, how does Delhi compare, with rest of the country, Altaf? If you could run us through any numbers that you have at this point in time to rent out an office space or to rent out a shopping space, a retail space, which of course is far bigger as opposed to maybe a small office space that you'd like to rent out. How much does it cost in Delhi as opposed to in Mumbai, Bengaluru and Hyderabad?
Delhi is significantly costlier than rest of the cities. The reason is because not much of development is happening in a city like Delhi because of available space is not there. If you compare with, let's say, Hyderabad, there is a lot of development that is happening in those places. Hence, the rentals are relatively lesser, and those cities are still getting up more in terms of population and stuff. However, if you compare with Delhi per se, it's a lot more settled. The city, the population density is very high. The spending is also very high as compared to rest of the cities like Hyderabad or Bangalore or Pune for that matter. Even Gurgaon and Noida are very similar. However, Delhi and Bombay are those cities where you'll always see the demand for any particular for any kind of real estate, whether it is residential, commercial, or retail, is quite high.
Okay, Vivek, I want to particularly understand from you what is the luxury property scene looking like in India. We understand that it's on an upward trajectory, that people are going more for luxury properties, and obviously from the numbers that we have, luxury rentals are also, or rentals in luxurious areas where you're likely to find more rich people, upclass people, is on a high. But do you have some numbers that can support the fact?
So, if you're talking specifically on the retail space, then luxury retail is a reflection of multiple factors, whether it is exclusivity of these markets or increase in consumption, which has happened in this period. And when it comes to the luxury housing space, where the traction has also been witnessed, we have seen the share of the luxury housing segment increasing in the last 2 to 3 years. And this is not limited to the housing sector, across product categories. As we saw a K-shaped recovery coming out of the pandemic experience, what we're seeing is the desire as well as ability in the luxury space, consumers being in the right position versus the other segment of low and mid segments. As a result, luxury housing as well across the country has done well. Some of the project launches that you saw in markets like Mumbai, Delhi, Bangalore in the premium segment, 10 crore and above, witnessing a phenomenal launch in the few days of phenomenal sales in the few days of launch. And there was one visible instance, but this has been a phenomena across the country.
Okay, Altaf, do you see this as an investment opportunity? Is that what people are doing when they go and buy a luxury property, or is it that I don't want to miss out anymore because pandemic has taught me I may not be alive tomorrow to experience that luxury? What do you think is the driving factor behind this consumption?
From a residential point of view, this is not this is less of investment, more of self-use. If you see, now the trend is increasing in terms of millennials getting into the luxury segment. Now, as the millennials are taking up positions across corporates, their disposable incomes are much higher as compared to the earlier generations. Hence, we see a lot of luxury spending both in terms of consumer goods as well as in terms of residential real estate. However, from a commercial and retail space, yes, it is totally investment driven, which is predominantly, the ultra HNIs and small scale business owners, which are the primary buyers in terms of commercial and retail. However, residential is totally otherwise.
Okay, Vivek, before I let you go, Vivek and Altaf, I want to quickly, Vivek, from you understand something which I hope will give some clarity as to why it is so expensive to rent office space in Khan market. I want to understand, and that is, with respect to commercial renting, not just for retail but for other purposes as well. Which are the states do you think that rank from top to bottom where commercial retail space is very, very expensive? And more importantly, what is driving the retail prices in Delhi in particular, if you could wind up with that?
Sure. So, like I said, one is a pecking order of these markets in terms of the associated price or the rental and capital values. It's been steady for the last few years with Delhi's Khan market, then followed by Mumbai, and then there are multiple other markets in cities like Bangalore, Hyderabad, and so on. In terms of the key determinant for these expensive values, whether it is about 1,500 rupees a square feet a month for Khan market or 1,000 rupees a square feet a month for a market like Linking Road in Mumbai, the key determinant is the value of business that these high streets, these markets are able to generate. Right, and in our assessment, we have seen these markets, these high streets, on an average, generating upwards of 2,500 rupees square feet of business every month.
That's an interesting number.
30,000 rupees a square feet a year. So this business potential, if this business potential keeps increasing, these high streets will continue to command
Right.
the associated rentals.
Okay, makes fair business sense to me. If you are paying up 1,500 rupees per square feet but generating 2,500 rupees per square feet in profits, I think it's a win-win situation. It's a good business proposition, especially if you are setting shop in Khan market. Gentlemen, appreciate you both taking time out and joining us this afternoon. I think with that, it's a wrap up on this bulletin. Thanks very much for watching.
BrahMos, stealthy, lethal, precise. It flies at 3 times the speed of sound and cuts through a warship like a hot knife through butter. China's navy has threatened its neighbors, and they are turning to the BrahMos for protection. The warship killer. This and more streaming on world's first news OTT, News 9 Plus. Download now.
Pakistan is actually genociding Baloch people. So being Baloch is a crime. If you are a Baloch, it means in the eyes of Pakistan, you don't have any right to live.
The Chinese and Pakistanis are colonizing the Baloch and exploiting their resources.
The Baloch armed struggle will continue unless China withdraws, Pakistan military withdraws from Balochistan and give Baloch complete authority to decide for themselves.
The Baloch feel that if they don't act now, they will become marginalized.
What lies ahead for Baloch?